The market has been crazy lately. You've all seen the headlines. You've seen what's been going on in the news. People are talking about a looming recession coming, the market crashing 70, 80%, all sorts of craziness in the market and the headlines. So the question is, do you wait this out or do you continue investing? Let's talk about it. Hello, my name is Artem Chuprin. I love talking about money, investing, and helping you grow your future today. The term recession gets thrown out a lot. The definition of recession is 2 consecutive quarters where the GDP, or the gross domestic product, all the things that we produce in America, if that has declined for at least 2 quarters in a row. The last time we saw a recession was in 2020. With all these talks of recession and things heading downward, I think it would be awesome if you guys hit the thumbs up button instead and at least make sure that my video doesn't hit a recession in that YouTube algorithm. I would appreciate that greatly. The big question everybody's asking is, are we gonna see a recession in 2022? Before we answer that question, I want to look at history to kind of find out what can you expect investing in a normal recession. We have seen 12 recessions since the 1940s. Every recession is a little bit different, with some like 2008 going down as much as 35% in stocks from the start of the recession to the end of it. But on average, the average recession from the beginning to the end has actually been 0 for the stock market. In other words, if you started investing at the beginning of a recession and ended investing at the end of a recession, your result would be 0 loss. Out of those 12 recessions, 7 recessions actually went up and only 5 recessions lost value during the recession. So before you start seeing all these scary headlines and thinking, oh, I better not invest and throw all my money into a safe bank account that doesn't grow at all, let's carefully study what happened to the stock market. What's crazy is that 7 of the 12 recessions actually gained value in the stock market. But to really get an interesting perspective, what happened to your stocks 1 year, 3 years, or 5 years after the recession started? On average, just 1 year after the recession, the market was up 15%. On average, 3 years later, the market was up over 40%. That is more than 12% per year of growth in the S&P 500. And 5 years out, the result was 80% growth, or on average more than 12% per year averaged in the S&P 500. In other words, if you decide not to invest when it's scary, if you decide to not invest in this wild time that people are talking about right now, you might actually end up missing out on a large percentage growth rather than saving yourself money in the long run. Timing the market is a fool's errand. Everybody wishes that they could time the market. But if you're able to just invest consistently over a long term, it doesn't matter if you buy at a high or at a low, you will make money over the long term. And if you do it consistently or dollar cost average, you will guarantee to make more money in the next 10 years than 95% of professionals. So do you really want to wait on the sidelines thinking, well, I'll buy in when the market is lower? Now, one interesting statistic is 1 to 6 months prior to a recession starting, the S&P 500 loses up to 5% on average before the recession initially starts. When somebody asks me, what is the best time to invest? I usually say last year, kind of as a joke. The second best time after that is yesterday, and the third best time is today. Start investing now. Don't put it off. Don't think that the market will go lower, then you'll go in. You have no idea where the market's gonna be. I have no idea where the market's gonna be. But the longer I invest, the more I put my money to work over a longer time frame, the more that money has a chance to grow for me. So let's answer the question, is there gonna be a recession in 2022? First of all, I don't have a crystal ball, and anybody that says they know for sure what will happen, they're just trying to either get some money from you or trying to lead you astray. Nobody has an accurate idea, but we can see a change in the environment or other factors that can affect the economy over the next year. So there's going to be 3 arguments for a recession coming and 3 arguments against a recession coming. Let's start with the negative first. The first big negative that people are afraid about that might cause a recession later this year is the term inflation. I'm sure you have seen it in the news. We've been hitting numbers like 7% inflation, highest we've seen in 40 years since the 1980s. The price of goods and services has been going up. The standard of living is a lot more expensive. Some people are afraid that there's less money to be spent on goods and services, and that will cause the stock market to actually go down later this year. But if you look historically, the stock market tends to increase during times of inflation. The second big negative is the taper tantrum. Back in 2018, the Federal Reserve started increasing interest rates, and that caused the market to kind of throw a fit. The market actually had a bear market or hit a slump at the end of 2018. And people are afraid that a similar thing will happen this year. As interest rates start to creep up, businesses' ability to borrow money or their ability to have a profit will be cut smaller and smaller, and that profit will cause stocks to fall. But again, historically speaking, if you look at periods where they had increased interest rates, only 1 out of about 7 went down in price for the stock market. The other 6 actually went up with the interest rates. But that uncertainty of rates and exactly how fast they're going to be raised or how slow or over what time frame, because there's so much uncertainty on that topic, that causes a lot of movement in the markets, and people are very scared and skittish when it comes to the Federal Reserve. The last contributing factor people are concerned about that could cause a recession is the supply chain bottlenecks. So companies are having a hard time with shipping or having a hard time getting certain parts, certain microchips, and a lot of companies are affected by this. Their profit margins are cut significantly. If it costs me a lot more money to ship my product overseas, my profit margins are going to be a lot smaller. And that means my stock, as a result, will not grow as fast. This has affected the entire shipping industry of the world. And because companies are so globalized, even everyday items are put together oftentimes from parts from different countries. Anytime there's an increase in the cost of shipping around the world, global companies or companies all around the world are affected negatively in their ability to make a profit because it's more expensive for them to get the product to you. We are seeing that the supply chains are getting fixed. Things are starting to look better, so hopefully that will not become an issue later on in the year. Now let's look at the positive factors of why we don't think there might be a recession in 2022. Usually there's about 3 to 4 years between recessions, and we just saw a recession in 2020. A recession is when there's at least 2 quarters of a GDP decline or a decline in produced goods in a country. So in 2020, we saw a small decline in the beginning of 2020 and a huge decline of over 10% in the second quarter of 2020. Historically speaking, having a recession that close to a prior recession is not very common. The second factor is we have very strong economic growth. Not only are prices going up, not only is inflation going up, but wages are going up as well. Purchasing power of people is moving up as well. Unemployment numbers are driving down, and we still have more than 10 million job openings in the United States. There's a lot of need for workers. The moment those bottlenecks and those things that are causing the economy to still be slow after the recovery, the moment they're getting fixed, we're going to be seeing a big boom rather than a recession. The last factor that we can look at is the consensus of the stock market is we are going to see growth that is a little bit slower than we have been seeing. There's not going to be as much stimulus money going to those large companies, so stocks won't grow as fast. But overall, the consensus is that stocks are going to grow. Companies are still going to be profitable in the next year. My personal outlook on 2022 is very hopeful, but cautious. I think we're in for a lot of volatility, meaning the market's going to do a lot of up and down swings, and that is really going to chop a lot of people up, meaning a lot of people are going to get hurt trying to get in or get out when the market's doing a lot of moving. So as the market takes a nice drop, people might sell out and the market will jump up without them being on board. And as the market goes up, people might say, oh, now's the time to get back in. And they're going to start buying in and the market will take a sharp downturn again. And that back and forth movement makes a lot of people kind of lose out either on the upside or the downside. So you want to look for buying opportunities. When the consensus of the market or the average person is scared about investing, you should be investing more. If you're seeing headlines that there's crash or there's doom and gloom in the markets, that's when you should probably try and be investing a little bit more. As Warren Buffett says, buy when there's blood in the street, or buy when others are fearful. That's when you should be greedy. And be fearful when everybody's greedy. So when everybody's sentiment becomes very positive, that the market is doing great, everything is awesome, everything's amazing, that's when you want to be able to maybe decrease your risk, decrease the amount you're investing, or kind of reallocate things. Right now, the time is not where everybody's super excited about the future. It's the opposite. People are very fearful, they're very scared, and overall, the tone of the economy is not overly optimistic. So my opinion, take it for what it's worth, is it's a good time to invest. Now, what's the market gonna do in the next couple months or a year? I don't know, it might be down. But over the next 3 to 5 years, the outlook of the market is very, very positive because of so much negativity already priced into the market today. As always, I wanna show you guys my Roth IRA. It has been a very choppy last couple weeks, but my account is back up to $100,726. I hit a low of $79,000 just a couple weeks ago, but because I'm not overreacting, I'm not changing things around too much, I'm just gonna hold my positions where they are, and as the market keeps moving up slowly, so will my account. Thank you guys for all your support, for spending your time here with me. Wish you all well. Love you guys. Artie out.